Hello everyone. So in this video today we're going to understand what is meant by ways and means advances. So ways and means advances firstly are a money market instrument. So they are an instrument which enable short term borrowings. Now specifically ways and means advances or WMAs are temporary loans which the central bank, in our case Reserve Bank of India, provides either to the central government or to the state government. So these are borrowings which the Reserve Bank of India provides to either the central or the state government. Now this difference is important because all the other money market instruments we were talking about right now, for example, you had treasury bills or you had cash management bills. In context of these instruments, it was not the Reserve Bank of India but money market participants such as banks, mutual funds, investment institutions which were lending money to the government. But out here it is the Reserve Bank of India which lends money. Another important difference is that if you talk about T-bills or cash management bills, it was only the central government which could borrow via these instruments. However, if you talk in context of WMAs, both the central and the state governments can borrow from RBI using this mechanism. Now, ways and means advances or WMAs were introduced in 1997. Prior to 1997, you had the system of ad hoc treasury bills. Now, we'll understand what was happening under the system of ad hoc treasury bills. So, prior to 1997, if the government faced a shortage of cash, or basically if the government's expenditure exceeded its revenues, the government would issue ad hoc treasury bills. So, the government would issue ad hoc T-bills, and it was RBI which was automatically purchasing these ad hoc T-bills which were being issued by the government. Now the problem with these ad hoc T-bills was that in order to purchase these ad hoc T-bills, the Reserve Bank of India was not using any existing cash which it had, and it was printing new money to purchase these ad hoc treasury bills. So basically these ad hoc treasury bills, every time they were being bought, they were increasing the money supply in the economy. So because if the money supply in the economy was increasing but the demand overall of different goods in the economy was the same, this was resulting in increased inflationary pressures in the economy. So this system of ad hoc treasury bills, because in order to finance those purchases, the Reserve Bank of India was printing more money. This was resulting in inflationary pressures in the economy. Now, this was happening because there was no set ceiling on what amount the government could borrow via these ad hoc treasury bills. However, under WMAs, this system has changed, because under WMAs, there is a mutually agreed amount between the central government and RBI as to what is the maximum amount these governments can borrow from RBI. So this amount is mutually decided. Also, because these are temporary loans which the Reserve Bank of India is providing, these loans need to be paid back in 90 days, and also these loans have a market linked interest rate. For example, if WMA loans are paid back in 90-day period, then the interest rate charged is the prevailing repo rate on these loans. However, if these loans are not paid back in 90 days, these loans are considered as overdrafts, and these loans are charged a penal interest rate which is repo rate plus 2%. So the interest rates on these temporary WMA advances are market linked. However, under the system of ad hoc treasury bills, the interest rates were not market linked and they were fixed. So under ad hoc treasury bills, you had almost fixed interest rates which was around 4.6% per annum since 1974. Now in periods when there was very high inflation in the economy, this interest rate would often become negative. That is, the government was practically paying 0 or even lesser than 0% of real interest to borrow money. Now, because funds were being available at such a cheap price for the government, this was promoting fiscal indiscipline. So in order to address these measures, you had the system of WMA which was introduced. So this is all that we wanted to cover in this video. If you did like this video, do stay tuned and check out the next video on certificate of deposits in this playlist. Thank you so much for watching.